Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, August 26, 2013. And as always, brought to you by Triton Wave Consulting, which is home to the Triton Waves that are early warning market timing indicators used in all time frames and all markets all over the world. All right, we're going to jump into this by looking at the E-mini futures, the ES continuous contract on the left-hand chart here, and let's see and look what happened this past week. We had this move. This is Sunday, so 1, 2, 3, 4, 5. Okay, this was the week before. This is kind of a continuation, but a move up on Thursday and Friday. And that happened right here on this is a daily chart here. This is a 21-minute chart, daytime only trading, not Globex. And we see as this came down from this point, then that's what started this cascade right here in T4, and T4 is still below zero. T5 is still below zero after this move down here. And it was in concert with this starting to move here. These are waves, so one moves into the next, moves into the next. This is an absolute ideal situation. A little blip up here, you can ignore that because it's just T1 on a big move down, and T2 is still below, T3 was still below. Then we had this massive move down. Now we have this corrective version up. Okay, now everybody's thinking, since we hit this big barrier down here on the, let me see what this is. This is the, this is like the 89, 2 days in a row. We hit it in the bottom and then took off the next day on Thursday. And there was a short-term trade, but you have to know that this was a counter trend trade right off of this exponential moving average here, up until this huge cluster that's going on right in here. So yes, we may get a few more points on the upside, but mostly I am looking at this since, let me elucidate this a little bit. Since T4 and T5 is to the downside, any move above zero at this peak, which like rivals these peaks up here, except this one's lower, you can expect that this will turn down, and this is a good place to get in on the downside. Now you may get another 5-6 points on the S&P on the upside if you want to play it that close to the chest, but mostly you can start loading up on puts to the downside. This is a counter, make no mistake about it. This is a counter trend trade. The trade is down. This is T1 on the daily going down, T2 T2 is heading down, T3 is heading down, and so forth, all the way through. Now this is still above. Granted, T5 is. Hang on 1 second here. Hang on. Granted, this is still above zero, but you can see the angle right here, and these are mostly, when you get into T4 and T5, they're mostly lagging confirmations, but the playable ones are T1 and T2. All right, if we change this right side to a 144 cash price, in fact, let's move the cursor over here. We can see that this is in perfect alignment with when there's only like 3 hash marks a day on the cash price on the 144, the 144 minutes. But when this moves down here, that's when this moves down here and takes this. So the daily and the 20 and the 144 are definitely in concert. All right, so now I'm going to make the left chart a 144, and I'm going to make the right chart a 21. And again, we can see that you can see the move down here coincided with this move down, this move up coincided with this move up, and now we have a down move that's right on cue right here. This last down move on the 144 started happening back here, because this is only the 20, this is the 21 here, so this whole space in here is this short space here. And we did have some moves. We had, again, I was comparing it to the daily before, now I'm comparing it to the 144. So even though 21 below 0, T5, T4, T3 below 0, T2 is above 0, T1 is a bit above 0. We have all this congestion right in here, and right now as I'm doing this, we're down 0.75 on the S&P. It is 7:30 Sunday night in Central Time. So when this peaks up like this, after it's hit a major support here, comes up to major resistance, and these are still heading down. Every single hash mark on the 144 is a down move since this move up here. So since the peak up here, this has all been straight down. Every single one. You can do it on your own chart, blow it up, and every one is a down move, lower low. Okay, so what do I expect of this chart here? I'm just going to put a daily up on the right hand side so we can get some numbers here. All right, so what I'm looking at is, let me see here. Let me get a bigger picture here. Well, it's basically the same thing that I talked about last week. We could get, hang on, Fibonacci retracement at the bare minimum. Let's see what this expands to here. Okay, so one of the reasons why we got this kick up is not only because it hit the 89 EMA, but it also, even though the one on the daily, hang on one second. Okay, just remember what I was going to say. This is kind of like, this is a 50% retracement from the last move back in June to a high on August 6th. So it retraced almost exactly 50% right at the 89 EMA. So let's drop this, and we'll do a retracement from that same spot to this present, and we're maxing out at 1668, and we're currently 1661. So possible you might get another 6 points out of this. I don't think it's going to go above the 50% retracement on this last move. On this last move right here. But if we get what I'm actually looking for is, let's get rid of this here. What I'm actually looking for is not this retracement here, which could take us down to, I'm looking for more a move down to the 144 EMA or the 233 EMA. So the 144 would take us to a 618 would take us to 1612, and the 144 EMA is sitting at 1600, which is actually perfect for the daily, because let me show you in the past what's happened when these drop precipitously. The 144 comes down to the 144. It actually went almost to the 377 here. This one went to the 144 back in May. Economic news has not been very good. I'm not going to give you any details. You can hear it on the news. The housing numbers came out. New housing numbers came out that weren't so good. Indian export economy is not doing well at all. So that's just another cog in the wheel. You know, the wheel goes around with all of its cogs. If some of them are missing, then we're in deep trouble because they're part of the you know, like major gross domestic product with imports and exports. So let's look at something else here. Oh, well, to summarize, before I leave this, I'm looking for 1600, and I'm looking for it rather quickly. Another reason is that T2, this non-confirmation from here to here, higher cash price, lower, much lower wave, and now it is completely below zero on T1. This needs another couple hash marks, and this is the short wave on T2 is going to be below zero. So I'm looking for down. It's put time. All right, I'm looking at Apple here on the daily on the left-hand side. Apple is a tough read. It's come right down to its 8 EMA on the daily chart, and all these T1 firmly above zero, T2 above zero. T3 looks like it could move up any day now. Contrary, on the 21, it started moving down right about here, almost at the peak. And if you want to drill down to a 610 or a 377 tick chart, you can actually nail this right at the top. And then it rolls down again and rolls down again. But it's starting to come back up a little bit with T5 still above zero, and these still kind of moving above zero. Not sure about this. This is still. This would have to move one way, or this would have to move just a little bit, either up or down, for me to see specifically what these waves want to do. We could drill down to a. I think I was following 987. 987 tick chart. Okay, so this is what I was talking about. 987 tick chart. Well, hang on. Let's move this back to a 21. Okay, so when the 21 cash price starts, you know, daytime session starts making a little bit of noise going down below zero here, and between here and here, you have to start paying attention. It's happening right here. You have to start paying attention to the tick charts, and here, right here. Although I didn't play this, because I was hard to play too many things at the same time because it zaps my concentration, but this was a from 511, 512 down to, you could actually carry it all the way down either to this EMA or this EMA. So this one was about 502, this was 499. But this is like the shorter, quicker move of 9 points and an option play to go with it. So once you start seeing things move regardless of what the daily is doing, the 21 has all kinds of counter trend moves. I mean, the daily was moving up way back here, and this was a counter trend move for about 15 points, and then of course you're always, counter trend moves are always a little more dangerous because they can whip up against you. And when this finally came back above zero, this was good for like almost 50 points. All right, I'm going to take a look at one other thing here, and then I'm going to call it a night. Intervals, Bing, GC, electronic. 21. Let's move this into a daily. Okay, so gold. Let me see. Gold here, 610. Okay, right hand chart is 610 tick chart, left hand chart is daily. You can see how the daily has spiked up above hit this EMA, went down below it by about by actually 50 points. It's better. It looks better on the 144, and then came back up here. It shot up out of the gate tonight, so it's had a range. It's had a range tonight of 1407 to 1390, and it's 1392 right now. It's been up. It's been up $11 and down. We're almost at the low. Down. It's down 3.5. It's been down 5. So nice little range there, but I like to wait. I like to let it settle in before I commit to any kind of a move on that. So we can break this down even further to a 144. Let's change this over on the left-hand side. Excuse me, to a 144, and we're going to change that 144 time over into a 24-hour chart. Here we go. Okay, so gold started moving up right back here, way back in August 12th, which isn't really a long time ago. So all these moves here, and we're going to start capturing a few of those. This is just like a bigger picture of what's going on. But as I move the cursor to the right, as I move the scale to the right, you can see the one moving over to the left, and these did move against you in huge counter trend trades. Let's move this to a 233. So right now, you know, this looked like it was really good right after the opening on Sunday, you know, about 2 hours ago, when it was looked like that. And I thought for sure it was going to shoot up. It was up $10, $11. That is a great looking chart by itself. But I also know from experience, when it shoots out of the gate that much, that it tends to want to come back down to where it shot up from Friday. So, and this huge move back here, some of it has to give back. So I was actually watching this and hoping it would hit 1391 before I had any plays, and it's sitting right there. It is sitting at 1391 with a low of 1390. So for those of you who are our clients, I will shoot you a text or an email of exactly when to get in here. But right now, I'm going to let it rest a little bit because it is a little bit. It's a little spiky, and I don't like playing spiky. I like the nice smooth one. So I have to see how this evolves. This is right now going below 0 in T4. And I might want to come down a little bit. This was kind of like this happened. I saw 1392, 1391. When it happens that easily, it probably has a little bit more to go. But just keep that in mind. I like it to the upside a little bit more. I think it has a little more strength here. It did recoil right off of 1400 on Friday. It got to 1399 and poked through, came back down again. So this actually, it might be a good play at 1380, but I'll come back to you and let you know. Okay, I want to bid you a good evening, a happy Sunday, and good trading on Monday. And just to reiterate, my company is Triton Wave Consulting, and I can be reached at tritonwaveguy@gmail.com. If you want to become part of this elite group of traders, I give out. I don't give out, but you can. Early warning signals for puts or calls or long or short gold, the ES, or high profile stocks. And have a good evening, and I will see you at the next update.